Hey everybody, it's Aaron Norris with the Norris Group. Happy New Year. It is January 4th, it's Friday, and when it comes to predictions for real estate in 2019, what do you think? That and much more as we cover the biggest headlines in real estate. Up on the radio show and podcast, we talked to Kimberly Nelson and Derek Harms. We interviewed them as part of a series we put together back in September, and we didn't have time to cover it all. But we do an interview with Kimberly and Derek, who helped us recreate the chapter Adding Square Footage, a very specific strategy used when the market is in quadrant 4. They helped us do a great job in sort of renovating the chapter. And this specific interview is talking a little bit more about how they got started in the business, how they ended up getting into real estate and ended up working together, and the pieces that they bring to the partnership. In this first episode, we get into more details about exactly what they're doing in a little bit later in the episode and episode number 2. You won't want to miss that on the radio show and podcast this week. CoreLogic reported home prices increased 5.1% year over year. The stock market has had a wild ride today, up to, when we're recording this at 11 a.m. this morning on Friday, up 800 points. Don't know what, by the time we produce this, what it'll be at, but a wild ride thanks to some unexpected employment numbers. Unemployment increased 3.9% from 3.7. However, the U.S. gained 312,000 jobs last month, and that was almost double the expectations, so that's exciting. Earnings rose 3.2% year over year, and the increased employment rate is largely due to people actually entering the job market. They are on a tear up to some record highs, which is great. Mortgage rates started the new year at a low, with 30-year rates at 4.51% and 15-year rates at 3.99. Oh, a 3, that's crazy. The results are in. More people took one-way U-Haul trips to Sacramento area than any other city in 2018, according to the migration data report from U-Haul. A press release from U-Haul on Tuesday ranked Sacramento-Roseville market first in the annual list of growth cities. U-Haul determines growth cities by calculating the net gain of one-way U-Haul trips to each city. Well, arrivals of U-Haul trucks into the Sacramento-Roseville market rose by 7% compared to 2017. And you guessed it, the majority of those came from their not too far neighbor, the San Francisco market. When Trump's tax plan became law a year ago, the real estate industry was more focused on caps to the mortgage interest tax deduction, plus state and local tax deduction. There was a lot going on. But where do opportunity zones stand? We're still in the middle of a lot of regulations. Opportunity zones allow investors to obtain massive tax advantages if they invest money on the sale of assets like a home or a business or a piece of art into distressed areas that the U.S. has set aside and identified as this opportunity zone. And you have to invest very specifically, and it's still under regulation, so we're waiting for the final rules to come out. But the primary criticism of the program as it stands right now is while its stated intent is to help people who currently live in the designated zones, a huge influx of capital will lead to displacement of the very people the program is trying to help. So gentrification, of course, is a key word there. We'll have to wait and see. We just don't have all the final rules yet, so we really don't know how it's going to play out. But yes, that's probably going to be one of them. 2019 is here, and Think Realty did an awesome job asking 7 very well-known economists 7 specific questions about what they think is ahead for 2019. The 7 questions centered on housing prices and their outlook and when they think a recession might hit, either 2019 or 2020. And here's what's some of the things that they had to say. Mark Zandi, the chief economist of Moody's Analytics, says rents and housing prices continue to rise strongly, outpacing income gains, creating increasingly serious affordability problems for lower and middle income households. And he thinks that there's a possibility of a recession in 2020. Doug Duncan, the chief economist of Fannie Mae, said about existing home sales that the market is behind us as far as 2017 at 5.5 million units of sales pace, so he's thinking it's going to slow down a little bit. He doesn't think there's going to be a recession in either 2019 or 2020. Lawrence June, of course, the chief economist of the National Association of Realtors, says, hello, Florida, Tennessee, Texas, and Nevada. Increasing number of tax filers will begin to recognize the high cost of living in California, Connecticut, Illinois, New Jersey, and New York, and they'll be looking for greener pastures in those states that don't have income taxes. As far as a recession, none for 2019 in his opinion, but unsure about 2020. And finally, just the last pick that we decided to choose was Len Kiefer from Freddie Mac. He says the era of high home buyer affordability and dirt cheap mortgages rate is probably over. Well, what a way to start the year. But hey, he doesn't think there's going to be a recession either 2019 or 2020. Homeowners love their do-it-yourself remodel, says the National Association of Realtors. And the number one reason they're taking on these projects is functionality and livability. Norris says that more people are turning to DIYs to add that sense of personality and uniqueness. And the top group doing this, even though they're cash-strapped, is millennials. As part of the report, they looked at a joy factor, and according to the report, homeowners reported a joy score of 9.9 for projects they've done themselves. Whether or not they've done it well, well, that's another story. You guys are watching way too many YouTube videos. So did you catch us on Forbes this week? I wrote a report on what I thought was going to happen in the market and things that we should be watching out for. And it's a little bit more longer. It's not just 2019. We look at things like economic growth, smart home technology, societal shifts, and thinking about things like co-living and whatnot. I think 2019, one of the things I'm most excited about is 3D printing and prefabricated homes. I think those are going to be really nice buzzwords in 2019, although we'll probably see things really pick up in 2020, especially here in California as we finish doing some more regulation around the accessory dwelling unit space. But after hearing all the input from all the economists and moi, we'll put a link to all the stories, of course, in our blog. I'd love to know what you think is ahead for 2019. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we missed something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. We would love to see you out and about. January 9th, we'll be starting up again doing the 10 decisions to make before the next downturn with Bruce Norris. He'll be doing that at Robert Hall Associates and their 2019 Los Angeles Real Estate Summit. He's going to be in the afternoon on the 9th. January 17th, we'll be doing that same chat at OC RIA, so we'll be in Orange County. And then January 26th, of course, we've got California Real Estate on borrowed time. All the early pricing ends next Friday, so the next time you see a video from me, it'll be the last time that you get the early bird rate or until we sell out. We're clipping along quite well, and we expect a very large crowd to join us. We're only going to do this once. Yes, we will be recording the video, but we ask that you sign up early so we can make sure we print enough books, because this bad boy is going to print today, and it is over 260 pages with 400 charts, and I can't wait to get it to print. And next week, I will share with you a little bit of something that we're going to share for the first time in over a decade, something that you'll be able to do through the Norris Group if you attend on the 26th, and it's only going to be available for those that attend the seminar on January 26th. For more information on all of our events, check out the Norris Group for hard money loans in Florida and California, including fix and flip, buy and hold, and new construction hard money loans. Hit the hard money tab, and if you're looking for Florida, there's a drop down. You're going to want to hit Florida. The programs are slightly different. And then for more information on passive investing with trust deeds and notes, hit that investor tab or investing tab, and you'll find out more information on investing through notes, mortgages, and trust deeds. With that, have a fantastic weekend. Happy New Year, and we'll see you next week.